The stock market made good gains this week. Does that mean it's back to good trading for retail investors? Well, I'll show you how to answer that question. Plus, we'll analyze the overall markets, figure out where the stock, commodity, crypto markets are likely to go. And then we're going to look at some day trades from Friday. We're definitely seeing a pickup in the action, and I'll show you how to analyze some of those short-term trades as well as the longer term. All right, well, market made good gains this week. It was a Fed announcement week, and we had the market rally into the close on Friday, and that's a good sign for retail traders. As I go through the charts this week, I'm going to highlight things that I'm noticing are quite different from the last number of months. But let's start with the chart of the S&P 500, which is what I have on screen now. And you can see that nice rally over the last few days, breaking this downward trend line. Now, when we look at downward trend lines, what we're really looking at is the control of the market is in the hands of the sellers. So if you have falling tops, that means the sellers are in control. And you can see that now we built a little rising bottom and broke that downward trend line on the daily chart. We had 4 good up days to finish out the week. So that means that the control in the market has switched from sellers to buyers. Now let's take a look at the shorter term chart. We're going to look at the 1 month chart here, and we'll make this a 60-minute chart. And there you can see that downward trend line was broken. We built a little base after the break. It's very typical. After you break a downward trend line, you pull back a bit, and then we really rallied well into the end of the week, moving us through this resistance level. Now we're at this one, but ultimately I think we are headed back to those highs around 457 or so on the S&P 500. Let's take a look at the Nasdaq 100. QQQ is the symbol for that. So I punch in QQQ, very similar chart. Again, downward trend line broken. Let's take a look at the 3-year weekly just to get that big picture scenario. You can see that the upward trend line was broken, and that really brought kind of an abrupt end to the action for traders. It's been a dry couple of months, almost 3 months of trading action for retail traders. Why? Because retail traders tend to focus on the smaller cap stocks, the technology stocks, the things that have volatility, action. And we saw that part of the market really dry up. So let's take a little deeper look and look inside at some of the sectors that retail traders like to focus on. One of the main ones is biotech, and the symbol for biotech is IBB. Now it was up about 8.5% this week. There's the IBB chart. You can see that it's been really dismal for a long time. And that has meant that that speculative sector of the market has really been suffering. Well, what it's done now, on Wednesday, it broke that downward trend line from this little triple bottom. And that points to the biotech market moving up towards this downward trend line, where it will likely stall and then hopefully break up and through that. So it's very early innings right now because we've only had 3 days. But what's important is that we've broken that first downward trend line. Let's take a look at the healthcare sector. Symbol for that one is XBI. That was another leader this week, up 8.9%. And again, generates a lot of good action for retail traders. You can see a little bit of strength there. How about semiconductors? SOXX is the ETF that represents semiconductors. And again, breaking the cycle of falling tops, the buyers have taken back control. Now, if we were to sort of rank these, I would say the biotech sector looks better than the semiconductors, for example. But what I noticed this week, and we're going to talk about it at the end of the video, was that there was a lot more action in the day trading stocks. In the stocks that were trading abnormal volume, we had a handful of stocks make really big gains for the day. So, you buy a stock at $2, in the afternoon it's $3. We'll show you at the end of this video how I find some of those things. But let's keep on moving. Let's take a look at the Canadian market. Symbol here, T.XIU. And this is very different looking from the US markets. And again, that's because of that emphasis on commodities. Well, we did have oil back up a little bit. We did have gold quiet down a little bit. But the TSX still managed to break through on the long-term 3-year weekly chart. It never got as ugly as the S&P. It never really had that strong downward move that the S&P had. Instead, it's been building this optimistic pattern with rising bottoms. That means the buyers are in control, and now this week it broke out. We may see a little bit of sector rotation. Energy stocks probably not going to give back a lot of their gains necessarily, but they might cool off a little bit. And I think you're going to see money flow into some of those groups that were overlooked, and you'll have a disbursement of the strength across the TSX stocks. Let's take a look at the TSX Venture. The symbol for the index is $JX. And there you can see a little bit of strength again at the end of the week, but it hasn't really made a sustained break of this downward trend yet. So I think you still want to be cautious with those microcap stocks. So when we look at the question, is it time for retail traders to come back to the market? In the Canadian side, I think it's going to be a cooling off because the retail trader was chasing those energy stocks, chasing those gold stocks, which did very well the last few months. And now we're going to see a rotation toward the small cap US stocks, towards technology again. And those areas are outside of the Canadian market primarily. There's a few in Canada, but mostly you find those on the Nasdaq exchange. And I think that's going to be the place to be. So if you're more of a day trader or a swing trader, in other words, you're trading for a few hours or a few days, and you've maybe been pretty bored the last few months, I think it's time to get back to work, put on your hard hat and lunchbox, and let's get back to trading. All right, let's take a look now at the commodity sectors. I'm going to take a look at GLD gold first, and you can see it went up very sharply, kind of a parabolic run, mostly on the Russian invasion of Ukraine. It's given back some of those gains. It got overbought, and that's quite reasonable that it would pull back. In fact, it could even pull back a little more and still not be a broken chart. But I do think you're going to see that cooling off in the gold sector, in the precious metals. USO is a good ETF to represent oil. And you can see there we've come back to that linear trend line. Last week I said we got overbought. How do we know we're overbought? Because the trend goes from being linear to being parabolic. And when you get parabolic trends, that almost always comes back to the trend line. That was one of the lessons from last week. You can see the beautiful, almost perfect bounce off of that trend line. I think we're going to see it come in here, make a little falling top, retest the trend, and probably just grind its way sideways for the next little while. So if you've been a trader of energy, I would step back from that sector a little bit and maybe focus more on the stuff that's been overlooked for a while, the biotech, the small cap stocks, that sort of thing. All right, let's take a look at crypto now. ETHE, we'll start with that one just for a change this week. Notice also that the first downward trend line was broken here, and now we've done it again this week, breaking that downward trend line. Again, this is stuff that's really popular with retail traders. When I say retail traders, I mean people like you and me, people sitting in our homes buying and selling stocks or crypto or ETFs, that sort of thing. It's not so much the large cap investors, the institutional money that chases after this stuff. It's more the emotional or more emotional retail trader. And when there's action here, the market's way more fun. And so when I see life in biotech, when I see life in these cryptocurrencies, I get pretty excited that the tides are finally turning on that stuff. Bitcoin, not quite as strong as Ethereum. Again, it broke its downward trend there. We made a little rising bottom here, and we're continuing to make rising bottoms, but ultimately we need to get up through the $32 level on GBTC as an example, as a sign that this is in fact improving. You can see the stock scores have stabilized, but they're still fairly low. That sentiment stock score 39 shows that there's really not a lot of optimism yet. Things are getting better, things are stabilizing, but I don't know that money is necessarily going to chase this stuff just yet. All right, now let's talk about that pickup in day trading and swing trading that we saw this week. One of the scans that I like to do in the evenings just to practice and see what I missed during the trading day is very simple. We're going to jump into the Stockscores market scan. We're going to build a little scan here. So I'm going to go into the market scan tool, and I'm going to say I only want to look at stocks that had at least 10,000 trades on the previous day. So for now, that would be Friday. I'm doing this on the weekend. I want abnormal volume, and I want a price gain of at least 3%. Very similar to the scan that we did last week. And what we're going to run now is run this market scan. We're going to see those stocks that were quite active. Look at how many it found this week. If I did this 2 weeks ago or even last week, there was like 20. And so that is the first sign that there's some real action coming back to the market. Now let's take a look at some of these charts. What I'm actually going to do, just because there's so many, I'm going to go back and I'm going to increase this to 20,000. So in other words, the stocks that are really moving. And I'm also going to limit on price because the best day trading stocks tend to be those under $15. So we'll say stocks under 15, at least 20,000 trades, run the market scan. Now there's only 30. That's a little bit more manageable for us. And as we go through these, we're looking at the daily chart, but what I want to look for are the stocks that have these big spikes of volume. There you can see the big spike of volume, traded 203,000 times, and then peer into those charts on the 2-day chart, for example. And what we're looking for are the right pattern setups. So GROM, because it gapped up, GROM, it gapped up quite significantly on the open. We're looking for the second signal. We look for the pullback and then the move back up through the opening price. It happened there, and that led to a little bit of a run. Not really the best run of the day. There were some that were better. But as I cycle through these, what I'm going to stop on are those that have that really obvious spike of volume, because that tells us that the crowd is gathering around that stock. So let's take a look at SFT. Everyone here can see that the volume really stands out. It's got good liquidity, and those are two separate things. This is how many shares traded. This is what I'm really looking for is a comparison of today versus other days, and you can see that this is significantly higher. Liquidity is how often traded. 27,000 times is a good liquidity. It's not huge, but it is certainly worthy of day trading. When I have a stock trading more than 20,000 times, I'm willing to trade it off of the 1-minute chart. If it's between 10 and 20,000, I'll trade it off of the 2-minute chart. But what we notice is that we had this pullback right here, and then we broke the pullback, and that led to a little bit of a run into the close. RDBX was probably, I don't know if it was the best mover, but certainly one of the best movers. Again, look at the huge spike of volume. Then we can peer inside this chart, and this is where it had some really great setups. So there's a break from a pennant pattern right here. You can see that the stock trading very abnormal volume compared to Thursday. So something's going on. The crowd has come to this stock. We find these very quickly in active live because we've got algorithms that look for that abnormal activity. So we catch on to them very quickly, and then we wait for the pattern. So what are the patterns? Things like breaks from ascending triangles, flag breaks, pennant breaks. We see a pennant break here. We see another breakout right here from a pennant. And those lead to good runs. That's a move from $2.10 to $2.60. Percentage-wise, that's 25% or so in the course of 15, 20 minutes, maybe half an hour. And then here again, a move from 260 to 340 in less than an hour. So again, day trading, really noticed a pickup this week. If you found it a little frustrating in the last few months, I think it's time to get back to trading because it does show that we normally get a pickup of action in the spring. Sometimes it typically happens in February, but this time things were starting more like in March, and it should run March, April, May, maybe into June, sometimes goes as far as into July, but I'm encouraged by what I see so far. It's not going to happen overnight. It'll take some time to build momentum, but something changed the psychology this past week, and that's a reason to come back to the market. Hope you've enjoyed it. If so, leave a comment, like the video, subscribe to the channel, and most importantly, trade well.